Good morning, everyone. Welcome back to the RationalInvestor.com's Daily Brainwave Party. It's Monday morning. Good morning, Ryan. Looks like Ryan's ready to rock and roll here. Colleen says, hopefully Brian's feeling a little bit less delicate. I don't know. Yeah. It is Monday morning, and of course, yesterday was St. Patrick's Day. So, in good old Irish fashion, Brian was treated to actually another. We have Adam here in Vancouver, who is a mezcal. I don't know whether you guys know what that is. It's sort of like not all. What I don't know. I can't remember how it goes. Not all tequilas are mezcal, or not all mezcals are tequila. I don't know. So it's one of those two. But anyway, no, didn't do the worm. No, and actually, I heard that somebody was saying that the worm actually is a sort of a manufactured thing for the tourists. But anyway, that's here nor there. But yeah, Saturday night we were at Adams here locally with the Vancouver crew. In fact, actually, there's Andrew. Andrew was there, and I think I passed out. Did you guys? And actually, I was half expecting to wake up. I passed out at Adams, and I was half expecting to wake up to have like a full face of makeup and stuff on. Like that's what we used to do when we were in college days, and somebody would pass out. But anyway, the boys were gentle with me, so thank you. I think Andrew was there. I think that's not Andrew. But I had a nice evening with Reza and Shane and Andrew and Adam and stuff. So yeah, yesterday was a bit challenging. And the good part about the Broiler Chicken Show is that it's just free for the YouTube audience and to try and help out the level oneers. So not really. It's sort of up to Brian's discretion whether he feels like doing it. And I just wasn't in the space, and I had to be on top of my game for Liam yesterday afternoon, so I decided to take the morning off. I hope you all lived through that. But actually, a special sort of treat. The Coinigy boys, they've been doing lots and lots of updates on their site, developer cycle, all that kind of fun talk. And I had sort of reached out to them and said, hey, it looks like the altcoin market is hotting up. So maybe we ought to do another Coinigy show. So we're actually planning on doing a Coinigy show for this Wednesday. Oh, okay. Well, Philip is not overly impressed with Coinigy. So we'll leave that conversation for another day. But anyway, the point here is that my sort of public offering, we sort of said, look at, we won't do a broiler chicken show this weekend, but we've got a Coinigy show planned for Wednesday, so tune in for that if you want free content. So just a heads up for all you guys, there is one of those shows coming down the pike. Wait, what's a Coinigy show? So somebody doesn't even know what that is. We used to actually, and you can actually find them if you go into the library. Under the Coinigy show links, we used to do a Bitcoin and altcoin trading talk show. We used to do this almost like on a weekly basis last cycle. And so if you want to go watch some of the old Coinigy shows, there they are. So Artem, if you want to check those out and see what I'm talking about, that's you can find that in the library under the video links and Coinigy show links. BAT. So anyway, good morning, everybody. Happy Monday morning. It is the second Monday of the month. I don't know, second, third, fourth, fifth, whatever. But I think it's every second week we have a special treat. We have one of our TRI OGers. I think he took the level 3 program just about a year or two ago now. And he's off doing awesome work in the market on a regular basis. And he volunteered December 2017. volunteered to come on the Daily Brief Show and do a nice little fundamental analysis summary for you guys to try and help you understand fundamentals a little bit better, especially with macroeconomic trends. So we're really fortunate that we have Jamie on this morning here. How are you doing this morning, sir?
I can't complain. Hope everyone's all well and had a good weekend.
There you go. It's a proper British greeting. Good morning, sir. A cup of tea. And a nice nod to the Queen. So can't wait to hear Jamie's presentation. Always stand-up quality information. And of course, we have the mayor of Vienna driving the bus this morning, keeping us on track, making sure Brian's on the right screens and all that kind of fun stuff. How you doing this morning, Alex?
Pretty good, sir. Glad to know you're feeling better.
Oh, thank you. Well, you know, sad thing is when you seem to get older in life, hangovers are harder and harder to get over. I don't know. But anyway, thank you for the best wishes. And because it is Monday, every Monday we like to do just a quick site update, our developer cycle. Sjord is working his tail off lately, just on about 20 different projects. So we have Sjord on the call just to give you a quick update of the fun toys that he's working on. How are you doing this morning, Sjord?
I'm fine, thank you. I have a bit of an echo in the background, so apologize for that, guys.
All right. Everybody's warned. Get on your echo glasses.
Yeah.
So with that said, where do you think we should start our adventure this morning? Should we start with Sjord and get him rocking and rolling, Alex? What do you think?
Sure. Sjord is always a good start.
All right.
Thank you.
So, Sjord, you've got your blue head on. Is there any particular screen you'd like me to show, or do you want to screen share, or how do you want to do this? Hey, there you go.
Yeah, I will screen share a bit.
Okay, so you've got the floor. Have some fun.
Yeah. So this week we executed some stress tests on our environment. And the reason for that is that we now have back our entire stock universe, which is about 100 gigabytes of data in our databases. And I really wanted to make sure that if we're going to do screeners, how far we could push the system. And also in the future, if all you guys want to create their own custom screeners, how that would impact our environment. I'm also have been working on the data integrity. So every stock in the S&P 500 is now in our database again, and it's tagged correctly by sector and by the S&P 500 tag. Level 1, 2, and 3 people in the lounge, they have an updated badge now. If they didn't already have the level 1 badge, it should be added now. Also made a process to activate and deactivate markets by exchange. And the thing we've been working most on, and it's not live yet, so that's why I'm sharing my development environment, but this is the regular dashboard that you see on the website when you log in. But there's now also an option, and it will be rolled out this week, that you can switch to your own dashboard, something I've been talking about for a bit. You can rename that dashboard, and you can make it your default dashboard. You can add widgets or resize widgets and save that layout. And you can just create up till 10 dashboards to customize your experience at TOI. At the moment, there are not a lot of widgets yet, but I will be creating widgets every week to start with for the screeners, and then I will add more and more, for example, the Twitter timeline and all that. So this is something we've been working on the past week as well. So stay tuned for the rollout this week.
That's cool. So you can add the TRI Twitter feed as a widget?
At the moment, no, but that's a widget I definitely want to add so that everyone can decide. For example, you could create a widget or a dashboard screeners, and you create a widget socials where you see the latest daily brief video, for example.
That's so cool.
Yeah, yeah. So yeah, that's the site update.
Awesome. Okay. So have you said your piece? Is there anything else you wanted to add, or are you done?
No, once I did the rollout this week, I will ask you guys to do some testing and to get feedback. And I think once you start using it, you will see other use cases for widgets as well. So then just post your widget IDs, and we will try to add them quickly as possible.
Awesome. Okay, thank you, sir. Totally appreciate that, and hope everybody appreciates that Sjord is just working like a dog to get everything all rocking and rolling for you. So when all the widgets and stuff are all put in place, oh, you guys are going to love this place. So way to go, Sjord. Totally awesome. And also, too, great job with Alex and Sen on the screeners, just continually spitting out ideas. Please understand, everybody, this still is very much beta. So we're just sort of going through and just digesting the signals that we're getting and analyzing and continually refining. Hats off to you. I'd also add Amory. If you're listening to this, I sent you a message from Sjord. We looked at yours. He's actually built a M and W finder for ideas that are above or below value on the volume profile. Oh my God, so sexy. So, by all means, if you guys out there, because you guys are all such incredible computer programmers, if you have built screeners and stuff, that you would like to try and integrate into the basic sort of screener module. And then, of course, as we move forward, create widgets and stuff off of that. Oh, just awesome. So, Amory, I did send you a message earlier today, and Sjord was totally jazzed with your idea. So, way to go. Got to say, we're taking full advantage of the developer cycle, and we are developing. So I'm very, very, very proud of all the hard work everybody's putting into this team project. It's just A quality stuff. Okay, so that's our sort of site update report. Thank you very much, Sjord. Totally appreciate that. I suppose we can just, why don't we, before we release the Jamie, I'll just do a quick overview of some of the price action I saw. I was a bit surprised this morning to see that the euro actually gapped higher this morning, along with the Japanese yen, the Canadian dollar, the Aussie dollar. We have the FOMC coming out this week and talking a little bit about policy going forward. So we should all be cognizant of the fact that this is an FOMC week. We noticed that the US dollar index itself put in railroad tracks here off of the weekly basis last week. So if we actually get a failure through the railroad tracks, that'll actually be a pretty powerful reversal off of a test to the top of the range. Data coming out of the States, and maybe Jamie will talk a little bit more about that, but data coming out of the States, kind of wishy-washy. Some indicators coming in very strong, things like consumer sentiment. Other things like housing kind of weak. So it'll be really interesting to watch. But also to remember, guys, that when we're in FOMC meeting windows, we often see some really dramatic price action and a lot of sort of FU kind of price action heading into and through that event. It's like Tuesday, Wednesday. So my hunch is, we're probably going to spend a good chunk of this week, the beginning of the week, preparing for that event. If anything, I see crypto is a little bit on pause to start the week. That shouldn't surprise. And just maybe we ought to do first things first, nice little quiz for everybody. If you were thinking about putting on a trade around a FOMC, what's our basic rule about trading around FOMC events? See if we got about 20 people there over on YouTube watching. Can anybody on YouTube even remember what our rule is? Oh, not bad. Good. All right. So the people in the lounge are answering. Good. Excellent, Joseph. Good. Excellent. Okay. So all you guys are learning. That's always good. Long and short of it here is, and I don't see any feedback from the YouTube audience, so I don't know whether that's because of the delay. But lots of people are chiming in here in the lounge. Don't trust the first hour until after that hour has passed following the Fed announcement. And kind of like what we're seeing on the euro this morning and Canadian dollar, Australian dollar. I mean, lots of gaps all over the place here. Even Japanese yen. We have to be very careful here heading through that FOMC. just to not get too lulled into believing anything ahead of that event. So if anything, probably, and it wouldn't surprise me if we go through crypto, that we actually see a very similar type action. Just cool your jets, right? The whole world is watching. The whole world is watching. It's interesting to see how the short end of the U.S. yield curve is still inverted, but the long end is very still healthy. So I don't think we have to worry too much about that right now. But I think what we have to be cognizant of now going forward is do corporate interest rates on the short term start to roll over, and then that will dictate Fed policy going forward. If anything, looking at this image, I think probably the entire community should basically say, well, considering that the spreads are not really spitting up anything of significant, I think on balance, and it'd be interesting to see what happens, but I think the Fed has the green light not to do anything here. And my hunch is there's probably going to be no change to rate policy. Of course, that's purely an assumption. We will see what ultimately happens. But let's keep an eye on these corporate interest rates. If they start rolling over again, then we know that, Fed's got to act. All right. So with that said, I don't see anything egregious, but why don't we release the Jamie? And if I happen to see anything that sort of jumps out at me, and especially on him talking about his data points, then I'll talk about that once he's done. So without further ado, our UK Brexit enthusiast.
great start, Brian. Thanks. Yeah.
I don't know whether he's an enthusiast or a disenthusiast. I don't know. It's when I came into the Hangout meeting this morning before it started here, him and Alex were in a heated debate over Brexit. So obviously the conversation is on the forefront in Europe. But I don't know. Where do you feel like taking us this morning, Jamie? Maybe you don't even want to talk about Brexit. Fuck Brexit. I've had enough of that nonsense.
That's completely correct. Yeah, I'm not talking about Brexit. So any British people listening to this, yeah, it's not happening. I'm too emotional to talk about Brexit. I just can't be asked. I'm done. No
okay.
More.
So let's have a
we'll start with the fun part.
Conversation. I'll put myself on mute. And take
Please
us
chime in anytime.
Yeah, wherever you feel like taking us, I'm listening.
Perfect. Right. Well, we'll start with the fun stuff. So it's not financial advice. As I say, this presentation is for informational and educational purposes only. The materials provided should not be interpreted as investment advice, an endorsement of any stocks, ETFs, futures, options, currencies, and cryptocurrencies, or an offer to buy, sell, hold, or trade stocks, ETFs, futures, options, currencies, or cryptocurrencies. Okay, right. Let's get stuck in.
You got the lawyerese down cold here. Way to go.
Yeah, you have to these days. Right. Well, let's get stuck in with what we usually start with. So we'll go over the macro news and reports from the last 2 weeks. Okay. So to start off, we had the Italian GDP quarter-on-quarter results come out on the 5th. So forecasted was minus 0.2%, came out minus 0.1%, so an improvement, but we can see that the Italian economy is still contracting, so still a recession for Italy for the moment. So yeah, not really much else to report with Italy. I mean, we'll see how the leading indicators for Italy come out over the next month or two, just to see if this position changes for the future. I thought I'd bring up the non-manufacturing index. So some of you who've watched my presentations before, I always talk about the manufacturing ISM. I thought I'd bring up the ISM non-manufacturing today because, well, as we've seen on a lot of the indexes, we've seen that the ISM manufacturing has been below 50. So for people who don't know, is below 50 means that the economy is contracting. But if we look, and not just for US, but also for Europe, the manufacturing indexes in general are around 55 to 60. So the US non-manufacturing, you could arguably say, is just keeping economies above float. I mean, if we start to see non-manufacturing slow down and we start getting closer towards 50, then maybe we should have a cause for concern. So, I mean, if we look at the non-manufacturing for the US, it was forecasted 57.3 and ended up coming out at 59.7. So a really strong service sector for the US. So something just to keep an eye out. The reason why I like to use the manufacturing is that it's more sensitive for the data compared to non-manufacturing. So for the ISM non-manufacturing, things are still looking pretty peaky. Australian GDP quarter on quarter. Can we be surprised? It was forecasted 0.5%. The actual was 0.2%. So we can see that the slowdown with China is clearly affecting the Australian economy. If that goes down further, could that be more of a confirmation to show that China is slowing even more or worse than what people are thinking? We'll have to find that out in the future, I presume. We look at the Canadian IV manufacturing PMI. So I was quite astonished by this and quite interested, to be honest, because this could possibly show the future of where America could be heading. We never know. So forecasted PMI for Canada was 55.1 and the actual was 50.6. So a huge drop compared to what was forecasted. I don't know if you want to chime in here, Brian, about the Canadian economy. Anything else you've been seeing? Or
well, I mean, the problem here again, the reoccurring theme here should actually be that the commodity cycle is ended. Mm-hmm. We're now headed into the growth cycle, fear, greed cycle. And the countries that are most vulnerable, probably for the next 5 years or so, are going to be countries that are heavily commodity revenue dependent. So countries like Canada, Australia, Russia, South Africa to a certain degree, but the big commodity providers, Canada to the US market, Australia to the Asian market, and Russia to the European market. These should be sort of like in our sort of gun sights as vulnerable markets. And the housing data, somebody was saying, we have an old rule. If you ever see one sector of the economy represent more than about 30-35% of GDP, then that's quote unquote a bubble. And right now, the real estate market for the Canadian economy represents about 70% of GDP. That's right, 70%. And the Canadian housing data came out last month, and housing prices were down 9.5% across the board, across the country. So, and you've heard me squawk about this a lot, but a country like Canada is extremely vulnerable. So my suggestion for you guys is maybe hold off on going and buying those Canadian getaway vacation homes just for the time being. There's a nice rosy picture for you, eh? Cabo!
Use the cash.
Obviously, this is heavily predicated on energy prices for Canada. We sell a lot of these oil sands oil down into the States, bitumen. So energy prices right now are on the uptick. So it wouldn't surprise me if Canada enjoys a little bit of a seasonal window here of relative calm. But, I would just simply say that it's going to be very tough for Canada going forward for probably the next good 5 years or so. And I can see it when I drive around Vancouver. I mean, every goddamn house is up for sale. And it's and locally here in Vancouver and BC, they just introduced a vacancy home tax. So if you own your house and you're like some Chinese billionaire or whatever, and you don't have anybody actually living in the house, boom, you just got hit with a brand new tax. So is there going to be incentive for those people to liquidate those, or are they just going to absorb the new tax? My hunch is that the government's depending on those rich foreigners just to take it on the chin. And the worst part about it is that the government bills this tax as sort of a way to solve the housing crisis when really it won't. It's just another government revenue scheme, and in essence, they just got another paycheck. And the worst part about it is that all it will do is it will just be another sort of disincentive to buy Canadian real estate. So put it all together, I wouldn't recommend anybody go and buy Canadian assets right now. Just cool your jets. All right, I'll refrain from commenting any further.
No, it's a great point. I'd never realized it was such a high percentage of GDP.
It's
alarming.
Good. And the worst part about it, right, is really Canada didn't really have anything like raw manufacturing. And of course, Mr. Trump hasn't made our lives any easier when it comes to like say, exporting into the US market. So is there actually anything being made in Canada? No. And the only reason why our economy's done relatively well is because of all this hot money coming in from overseas. And, you know, this is all ebb and flow. It goes back and forth, back and forth. So we just went through a big ebb. And my hunch is Canada now actually has to go through a 17-year flow. And the thing that will really hurt Canada badly is when oil prices finish their recent little rally here and they start rolling over in earnest, then Canada is really going to take it on the chin. But that's for another day.
Yeah. I mean, how much would you read into, say, the Ivey Manufacturing PMI showing how this...
the key here with regard to this number is all about the Auto Pact and what happens to Southern Ontario with Mr. Trump's sort of, you know, war on anybody who's not American. And I think it's, you know, it's starting to feel the bite. The issue will be, I think, you know, if this real estate market does start getting going in earnest and we actually start to see cracks in the sort of, you know, the banking industry in Canada and stuff, you know, what does the central bank do with regard to short-term interest rates? As you see on your screen, they've left them alone. But if they actually have to start thinking about cutting rates to try and hold up the economy, what does that do to the Canadian dollar? And I got to tell you, man, the Canadian dollar, I mean, we just went through a really friendly cycle, and now we're actually heading into an unfriendly cycle. And, you know, I don't know where the bottom on the Canadian dollar is, but it could be pretty nasty here. So, yeah, long and short of it here, there really isn't a manufacturing industry here in Canada. What manufacturing we do is basically servicing like Detroit, the Canadian Auto Pact, and of course, you know, Mr. Trump's issues with trade and stuff doesn't help that situation at all.
Yeah, I was just thinking of trying to connect the dots between, as you say, Canada and America. I mean, I haven't really had a look at the Canadian export data, but if the exports are down, with obviously America being the largest trading partner with Canada, whether this could be a sign of US citizens reducing their spending. Just trying to think a way around whether this data is quite important from looking from a US perspective. I suppose I need to have a look more at the exports, but yeah, interesting stuff.
Yeah, I mean, any way you shake it, Canada was in the sweet spot of the market for the past 10, 15, you know, almost 20 years, really.
Yeah.
Canada should be on the outs now for like the next 10, 20 years. So
have fun.
Hold off on buying your Canadian chalets. You might be able to get them at fire sale prices in a couple of years.
No, it's the same in London at the moment. The London prices are in negative territory as well, and they're also in bubble territory in London. It's not the same for the rest of
it, right? I would actually make the argument that all of the world economies, like the globe, is going through one of these contractionary processes. And ironically enough, the Americans, they're actually in the best position out of everybody around the world.
For how long?
Well, right? Is like, you know, like for instance, Canada has a staggering debt to GDP. And we're entirely dependent on the revenues from the oil industry to service that debt. Well, if oil prices collapse, the American consumer, of course, is going to love that. And the U.S. Manufacturing will take off again. But a country like Canada, if the commodity prices break, and the interesting thing is like 1980, that was the peak of the Soviet Union, right? And their Moscow Olympics in 1980. That was the end of that commodity cycle. Had the Soviets and the people that were in charge of the Politburo knew what to expect for the next 10 years, and oil prices, I think they broke in like 86. So it took like 4 or 5 years following that cycle peak for the oil market to break in earnest. And that's the sad part about it is I look at the politicians here in Canada, and none of them even consider these long-term commodity cycles and stuff. And it's just a potion for disaster here. And the irony of it all is I've always made the argument that, the Amero is coming. I suppose Mr. Trump is trying to delay that a bit, or maybe he's trying to make the American bargaining position a lot more powerful. But you could make the argument that the Canadian dollar, because of like the actual economics, is not even a fraction of what it's trading at now. There could be a major run on the Canadian dollar. It wouldn't surprise me.
We'll have to see. Maybe they'll start accumulating Monero or Wildnero. You never know.
Okay, I should probably mute myself. We're spending way too much time talking about Canada here. So continue on, sir.
No problem. Okay, right. So yeah, BOC stayed the same, 1.75%. Just like the UK, we are puppets of the Federal Reserve. ECB interest rate decision stayed at 0. If for people who haven't known already, the EU have started, well, they don't call it quantitative easing, they call it something else to make them think that they're not doing QE, but they started QE again. So the question for me, personally, my opinion, is how long is that money going to get actually into the economy to help it out? Whether it's very effective or not, it remains to be seen, to be honest. But that's one thing that I'll be looking out for, is when we start seeing in the indicators for GDP levels starting going up or debt decreasing. And as well, you would have heard with Deutsche Bank and Commerzbank, seem like the merge is actually going to happen now. So Deutsche Bank must have been in serious trouble for Commerzbank to merge with them. I mean, they're the biggest rivals between one another. So things to watch out for that. How long that will take until the merge will actually be confirmed remains to be seen. So as usual, lots of fun stuff going in the EU going on. So never a dull moment at the moment. Japan. So Japan's GDP quarter on quarter for Q4 was up 0.1% from forecasted to 0.5. One of very important things which I like to show is the exports of the Chinese. So the Chinese exports forecasted to be down 4.5%. The actual was down 20.7%, which is huge. So this clearly shows the demand and the slowing economies all around the world for China to be down 20.7% year on year.
Wow, that's remarkable, eh?
Yeah. So,
domestically, the question you have to ask yourself is, that's the official data point. I wonder what is the reality.
Exactly. The reality is 40. Exactly. Yeah. You're so right. But yeah.
Then,
so
this is where the shit, the rubber meets the road, because the question will be, we've talked about this lots. China has just a ridiculously huge debt burden that they're servicing. At what point do these companies start defaulting on all this debt that they owe?
Without a doubt, yeah. Completely agree. I mean, and then as well, imports are starting to show negative territory as well. So it's clearly affecting them domestically as well. So, who knows what's going on over there? My friend's in there at the moment. He's over in, I think it was Beijing, and he well, to be fair, he's just gone partying every night, but he said it's just another world. But yeah, China take your guess. I mean, as I like to look at for the PMIs, you've got the government one, but the Caixin is also a very good one to look at, and they give some very detailed reports. So if anybody wants to have a look more into the Chinese economy from a less biased point of view, let's say, then look at the Caixin, which is the private manufacturing index. So China, fun stuff going on there. Building permits, so up from forecasted from 1.28 to 1.34. So still on an upward trend overall in the US. So still looking okay at the moment. Industrial production down 0.3% from forecasted, and then we've had the preliminary results for the Michigan Consumer Sentiment Indicator. So that's up from forecast. There's still a wide spread between current and expected consumer sentiment conditions. So usually when you start seeing these very large spreads between current conditions and expected conditions, this is when we start to see turbulence from previous historical data. So definitely something for anybody who wants to have a look at that and put it all together in a spreadsheet. Some fun stuff if you like me and enjoy spreadsheets. Right then, to talk about today, so we're just going to go over, it's not going to take too long, don't worry. It's just going to be talking about a coincidence. We always talk about leading indicators, sorry. But I thought I'd just show a coincident indicator just to use. So we want to make sure we use coincident indicators to basically confirm what we think from the leading indicators, okay? And then we're going to talk about emerging markets. So obviously a lot of people will look at emerging markets and just look at the GDP perspective, are they going to grow in the future? Yes, well, buy. But I'll just show a couple of other things, viewpoints that I like to look at when it comes to emerging markets, just to try and just give a different perspective, but also, just to give that different opinion and just to try and, flex that brain for everyone, just to look from different perspectives. So if we look at coincident indicators, so the US initial jobless claims. So as you can see, so this is basically weekly data that comes out. And basically the amount of people that claim for benefits, well, that's what we'd say in the UK. So they would claim insurance, is it what they call it in the US? So as you can see, it looks like that we're starting to get more of a possible trend reversal here towards the end of the graph here. So this is obviously a graph from 2008 all the way to present day. Okay, so your green line is a trend line. So you can see that the initial trend is actually flat. What that can tell you from long term, well, you could look at it from a perspective of that in the long run, there aren't enough jobs to be created in order to limit that initial jobless claims in the long run. So obviously we should never ever trade with coincident indicators unless your viewpoint is that it's going to be very different from the leading indicators that you've looked at. So obviously we've been talking about the US slowing with the ISM manufacturing and non-manufacturing. So is this a confirmation that it's starting to happen? So the leading indicators can be a 6 to 12 month indicator of the future. So with this initial jobless claims, is this now going to start showing that this weakness is going to start showing that people are starting to lose their jobs and claiming benefits? So yeah, you could also use, so for people who know the non-farm payrolls, so you could actually calculate your non-farm payrolls before the data comes out from using the initial jobless claims, just in case anyone's interested. Since it comes out weekly, you can then look from month to month and then looking at the weekly initial jobless claims data, and then you can try and work out what's the expected jobless claims is, the non-farm payroll, sorry. So for people who enjoy stuff like that, like me, then there you are, that's it. Right then, so emerging markets. So a few things that I like to look at when it comes to emerging markets. So we're going to look at demographics briefly, just a couple of websites I'll show from the infrastructure, political stability, and also pensions, and how these things are very important when looking at emerging markets. Okay, so demographics, I'll just quickly go over this. Demographics is a very, very important thing to look at. So for me personally, it's one of the main things you want to look at. There's a really good website if anybody wants to look for a website. I'll pop these links that I'll show during the presentation in the chat and also over at YouTube and in the lounge for anybody that wants it. So populationpyramid.net comes up with some really cool stuff. So you can type in any country, continent, and it will give you the forecasted population. Also, loads of different things. So whether it comes to age at first marriage for male, if that intrigues you, lots of different cool stuff to look at, health, lots of different things that can give you more of a, I suppose, better conclusion of how a country is getting on. So this is populationpyramid.net, so I thought I'd show that. I won't talk too much. I know, I remember, because I'm fascinated by demographics simply because, was it level 1 you do demographics with TRI? We did it in level 1, I think. And I found that quite fascinating, to be honest.
Yeah, and really it's, like a country like Botswana and its demographics, is it going to make that big of a difference to the global economy? Probably not. But what I found really fascinating is, if you're looking around the world and you look at the bigger economies, just to sort of get an idea of what their populations are doing, what part of the life cycle they're in, and then what's the sustainability going forward. And Japan's been such a really good illustration of a very top heavy economy with population, where you can even see on Jamie's screen, even they now actually have a demographic that's over 100 years old. There's actually even a percentage of their population that's in that category. And like, what is the average retirement age? It's probably like 60, 70 years old, somewhere in there. And you can see in Japan that a good deal of their economy is either below the working years ages or above retirement. And so as a result, the Japanese economy is kind of stagnated. But really interesting how, if you look at like a country like Libya, to try and understand why Gaddafi lost power so quickly and so easily, you actually see, and I don't know whether you can fire up Libya on yours. I always found it a
no worries.
Let's see if I can just, oh, you got it there, Andy?
Yeah, no worries. It's a really good site, to be honest. So,
here's a situation where you have a whole bunch of people that are very, very young, and they all want their kick at the can. And you got like one guy who's in his 70s. I don't know how old Gaddafi was when he kicked, but all those people that are just coming into the workforce, they just had enough of the old days, and so they just turfed out the old leaders. And I think that last screen that you showed, you can really sort of see how the world's population is we're moving into a new sort of age where and I guess it's coming out of Africa and Asia and stuff like that, where massive amounts of people are coming into the economy and coming into sort of the workforce and stuff, and they don't really know anything about sort of 20th century politics or Cold War or any of that kind of stuff. They're just what am I going to do today? How am I going to put food on the table today? And if they don't feel like they're getting a fair shake, when you have demographic pyramids that look like that one on the world on your right hand side of your screen, this is the ingredients for like Libya type revolutions. And the worst part about it, of course, is that usually 5-10 years after the revolution, you live in a world of chaos. You think of the French Revolution, same sort of thing. Yeah. Louis XVI got whacked and Marie Antoinette got whacked, but they had to go through like a good 10-20 years of just absolute chaos when it came to who's actually driving the bus. And the worst part about this, what really scares me, and Jamie we were sort of talking this a little bit about Brexit earlier. Sorry to bring it back to that, but we don't necessarily have to talk about Brexit in particular, but what I do see, and these demographic situations speak to this, is that the sort of 1% that are in control, they're losing their grip. They're trying to fuck over the population by saying, oh no, well, yes, we let you have your vote, but we didn't like how you voted, so we're just going to ignore what you actually asked for. And you're going to get this huge chunk of the population that sort of loses interest in the political system as it exists. And, a la Libya, if those massive chunk of population lose confidence in the system, then that just lays the groundwork for, totalitarian dictatorships. You could argue to a certain degree what happened in Germany in the 1920s was basically the population completely lost confidence in the prior political system, and it just it opened the door for totalitarian dictators. You could argue to a certain degree what happened in Russia following the collapse of the Soviet Union, and now they have a totalitarian dictator. So, the writing's on the wall, people. Don't be shocked if we actually have to go through a 10, 20-year period where totalitarian dictators are actually running our world. Boo, hiss, hiss, boo. So, ironically enough, with regard to the people that are in control of Britain right now, it's actually in their best interest to listen to the population and do what the population asks. If they don't, they're actually opening up the door for much bigger problems down the road.
Perfect. Well, thank you for that lovely positive viewpoint. Lift the spirits. Right, over to the next one. So demographics, if you want to learn more about that, well, get off your ass and do level 1 if you haven't already, because it definitely opened my eyes.
Isn't that interesting? Google didn't like my rant there. CIA's like, we better shut that guy up. I don't know whether you guys noticed that. Literally, as soon as I said that, Google kicked me off of the call.
Really?
Yeah, I dropped there.
Oh, right, okay. Well, I'll be next. Better turn my VPN on. Right, next is infrastructure. So I like to look at infrastructure when looking at an emerging market, simply because, well, I mean, if you want, goods going from one place to another, and also, you want to make sure people are urban, can easily get to urban areas where the work is. It's very important to make sure that infrastructure they've got a really good infrastructure to basically make that country grow. So these are some statistics that I've got from the World Bank. They come out with a report every year for the logistics. So I'll pop the link in there as well. So just quick overviews, basically just for you all, just to think from another perspective, I suppose, if you haven't already. So yeah, so no surprise, Germany's actually one of the top for infrastructure, of course, and then the Danish are close just afterwards. We've then got, there's another index from the World Bank, and that's the Political Stability and Violence Index. So once again, Denmark and Germany are one of the top ones that you can look at. Towards the bottom, so this is a mixture of developed and emerging markets. So you've got also towards the lower part, so ones that I'm personally looking at for the future is countries such as India, Bangladesh, Nigeria, Brazil as well. So it's very important to look from that point of view. And then another one to finish off.
So this means that India is not very politically stable right now. Is that what that implies?
Yeah. So, well, in comparison of, say, developed markets, I mean, it's got an index of every single country in the world. So, I mean, this is just a mixture of the two. But India, I mean, as you can see, it's a much better politically stable compared to, say, Bangladesh. Nigeria, I suppose it's not surprising. But Bangladesh, yeah, much more so. I'm quite surprised, to be honest, that I think the thing with India, it's a very difficult one because you have, if there's any Indians, just tell me I'm wrong, but there's something like, I think there's so many different cultures within India. So there's over 20 languages, I think, within India. So it's a very difficult scenario for governments to try and handle, because you're looking at, it's basically, I suppose it's like the EU now. The EU is practically trying to be one country, but, with all the different cultures, languages, and, personalities, I suppose you've started to get these, I suppose, chains of people trying to rip off the chains to try and, get away up to a certain point. It's hard to keep everybody happy. So I think India's... So India's quite a difficult one, I suppose.
Yeah, I didn't. I mean, it would be interesting. That's something that nobody's expecting. If one of these sort of big Asian countries actually starts politically falling apart, and it breaks into like civil war and stuff like that, I didn't realize that. And this is based off of the World Bank's data. They don't really paint India as very politically stable. That kind of surprised me. So.
Yeah, I mean, So. Yeah, interesting stuff. So definitely stuff like that we should really just look at, just to try and confirm our views before you want to take a trade on. You want to look from the top down, and it is very difficult, of course, to look at emerging markets and where these markets are going to go and how efficient they are. So that's another thing. And then another one is pensions. So you're probably thinking, why pensions? Well, as you can see again, Denmark, Holland, the best. So you've got from left to right is not sustainable to sustainable, and then from the bottom up, it's poor benefits to good benefits. So you could say here that the best pension system is the Netherlands and Holland, and then the worst pension systems are Italy and Austria. That's probably the last thing you want to see, is Italy having probably. I mean, it's got good benefits, but it's not sustainable. According to, this is Mercer, so this is an Australian company who deal with.
Or is that Austria?
Is that what? Sorry,
is AUT Australia or Austria?
That's a good point.
Austria. AUT is Austria.
It is Austria.
Really? Is that interesting? I wonder why that the pension system's so in trouble there.
Well, because I guess Jamie's going to tell us.
No, I will not. Okay. I didn't have time to look at 180 countries worth of pension data. I honestly don't know. Something yourself you can have a look at that. Whether the benefits are very high, because I know in Italy, at least from the limited amount of me being there, I know that the pensions are very high. To be honest, I mean they're a lot higher than in the UK. UK pensions aren't exactly great, but as you can see, the UK, where is the UK there? I think it's somewhere in the middle, somewhere. It's I don't even think it's there. Yeah.
So AUS Australia, they actually give it pretty good rating, eh?
So Australia, where are we with Australia? So Australia, we are So
Sweden. So
I mean, the main thing So I mean, why am I saying to look at this for when you're looking at emerging economies? Well, one way I like to look at pensions is if you have a very good pensions infrastructure, then when you're getting your wages and part of that's going into a pension fund, well, that pension fund is then going to buy the index of that country. So you basically have a guarantor of somebody buying, whether it's the S&P 500, the FTSE 100, whichever the country it is. So from that perspective, I mean, you could look at, say, China. So China doesn't have a very good pension system. And that in turn, I mean, if you look at, you could look at Chinese indexes and you can say they're growing 6.5% year on year, but why isn't the index going up over time? So it's little things like that you just need to be aware of when you're looking at these economies, because just because they are growing, it doesn't necessarily mean that the index is going to go up. So just a couple of points as well. If you do want to have a look at emerging markets, so this is just an example of a couple. So you've got Nigerian index ETF here, you've got your Indian in grey, you've got Brazil in gold, and then you've got the emerging markets ETF in blue. So the reason why I'm showing this is, well, if you're not actually sure, if you're saying bullish emerging markets in the long term, but you're not sure which one will outperform, because the aim of the game is, if you're going to say long India, well, you want to make sure that that outperforms the sector. So you want to make sure that outperforms the emerging markets ETF itself, because otherwise there's literally no point. You're having more risk on one country when you could have been diversified and outperformed if you actually had the sector ETF. So that's basically the emerging markets. Just a very brief one today, because I know I've been been going on for a very long time.
Well, I keep interrupting, so my apologies, everybody.
No.
Jamie. Great information.
No, it's no problem. It's just trying to look from different perspectives, try and get people to argue with me. So then, this is what we want. We want discussions of how we're looking at different markets and, putting it all together. And we're going to have one.
I think Brexit is a good thing.
Depends, exactly. Once again, exactly. Perspective-wise, yeah. Well, economically, it could be more beneficial, but then peace-wise, I mean, personally, I'd rather the economy do worse and have peace.
Kidding with you. I didn't mean to derail you. Sorry about that.
No, it's absolutely no problem. It's not going to be Guy Fawkes soon, as I said to Alex. It'll be.
If you want to know the impact of Brexit, I thought it was hilarious on Twitter over the weekend. The BBC interviewed Roger Daltrey. If you don't know who Roger Daltrey is, please Google him. I won't give away the answer. But his response to Brexit was just hilarious. So have fun searching for tomorrow's Daily Brief. I'll show you that interview with Roger Daltrey. It was too funny. It was hilarious.
Oh dear, good old Brexit. Oh, I can't even say it anymore. So to conclude, using coincidence. You're using coincident indicators to check yourself. That's all really you should be using coincident indicators for, because for people that don't know what coincident indicators are, it's basically telling you what the economy is doing now. But
actually, that might be a really good idea if you could, for maybe your future episode, sort of create like a 3-tier lagging indicators. These are the indicators that fall into lagging. Coincidental indicators, these are the indicators that are coincidental. And then leading indicators, these are the indicators that are leading. That would be a great little reference piece for us to have in the library. So if you want to think about doing something like that, I think that would be totally awesome. I'll work on it too with you if you want.
Okay. What else are we looking at? So don't trade coincident indicators, basically. Markets will always factor in things that, at the end of the day, markets are a leading indicator of the market itself, if that makes sense. These days you've got that many bots trying to predict what another bot's doing that's predicting what the economy is going to do. So, we don't have all this billion-dollar software, etc. So we just need to make sure that we always trade and look at things from a very, very simplistic but very smart way to do it, to try and cut out all the nonsense that goes on, and we just want to get straight to the point, because we need to try and be ahead of the curve, and you're against so many institutions, etc. So
make it really easy on everybody. If you want to write this down, the stock market is the ultimate leading indicator. It's that simple. That's like economics 101.
Yeah. And then, so different angles to view economic indexes other than GDP is up. So that's from the emerging markets. So to finish off quickly, just the reports over the next 2 weeks of things that are coming out. So we've got the Fed interest rate decision. So I'm sure Powell has a dinner with Trump to pick up his scripts of what Trump wants him to say for the FOMC meeting.
But actually, he did a recent 60 Minutes interview. And actually, I was quite surprised that he came out and publicly said, Mr. Trump does not have the authority to fire me. So I thought that was fascinating.
Well, yeah, still, I don't know. It's just a bit weird, isn't it? Going to dinner. I always thought that, they should be working separately, but yeah, they're going to bring it for dinner, and you're not going to do this because I don't want it.
Well, it's like, I don't know whether you're aware, but like in almost every other country around the world, the central bank is actually extremely closely tied with the government. Like in the UK there, the Bank of England is actually heavily influenced by the political scene. So, and it's kind of funny that we actually have a Canadian who's actually in charge of the Bank of England right now. Try and figure that one out.
Yeah.
But anyway.
So that's the Fed interest rate. We've got the Bank of England interest rate decision. Wouldn't surprise me that's bound to stay the same. The amount of uncertainty that's going on in Europe at the moment and in UK in general. So yeah, so we've then got the manufacturing PMI preliminary results to come out in Germany. So they're forecasted 48.1. So still contracting. I mean, that's preliminary results as well. So let's see when they come out on the 22nd. Building permits forecasted 1.3. So not much, pretty flat to be honest, but I suppose expected. We've then got US GDP quarter on quarter. We've got the UK GDP. I'm quite interested to see what it will be forecasted and also the actual results that come out. I mean, the data has been, as to use your terms, wishy-washy. It's been up 1 month, down the other. It hasn't really been that flat, to be honest, looking at leading indicators. So, yeah, for me personally, I think it's only a matter of time before the slowdown that's happening within Europe the sharp slowdown that's happening in Europe will start to come into the UK. So something to keep an eye on if you're a UK resident. Michigan Consumer Sentiment Indicator. So yeah, I'll be over the next few months. I personally, depending on how there's so many geopolitical things going on, events that are going on at the moment. But depending on, I mean, we've got the trade war. I think that's been delayed now, hasn't it? As in like the agreement or meetings or whatever. So there's so much uncertainty at the moment that we only need one negative one really to then start, I suppose, scaremongering citizens and making them maybe try and save a little bit more.
Scuttlebutt generally is that the U.S. government shutdown really hurt consumer confidence in the U.S.
Yeah.
And since they've sort of ended that shutdown stuff, the consumer's feeling a little bit better. And I even noticed, I think it was Friday, consumer sentiment actually came out a little bit better than expected. So I think we're probably going to see consumer sentiment relatively okay in the States. But I can't, I would imagine consumer sentiment globally is on the downtick, not the uptick.
Yeah,
this is a funny situation, everybody, where you're actually going to see the U.S. kind of disconnect with the global sort of econs. And of course, this is exactly what Mr. Trump wants. So don't be surprised if you actually see like the world economy going one direction, but the U.S. economy going a different direction.
Yeah, good point. And then we'll see how long that's sustainable for.
Of course.
Yeah, definitely. I mean, they're still pumping money into the economy, aren't they? The US, as if they're, in the year 2 after a recession. So it's a bit crazy, to be honest.
Well, I mean, the Fed has taken the opportunity to raise rates. So what will end up happening here is I think that the inertia of the global situation will ultimately lead to either something, is it Italy that breaks? Is it China that breaks? Is it, it's interesting how, politically India looks very interesting. I never even considered that before. But is it India that breaks? Like just recently in the past month, we had India and Pakistan starting to saber rattle again. Maybe a war breaks out there. Who knows? But what I think happening is because the Fed has raised rates, you'll see them come quickly in and cut rates in the face of that global problem. But I don't think we're actually going to see the U.S. economy roll over too hard here because, what usually breaks these things is debt levels. And the American debt levels are not at the levels that they were in 2008. Like, you just have to understand, 2006, 2007, it was just ridiculous. Like, does anybody ever remember the lost another loan to Ditech commercials? I mean, these commercials to go out and borrow money. I was joking. I think it was on Friday. We were talking about actually maybe it was in the class on Saturday, but we were talking about there used to be like TV shows on TV about car dealers who were just like doing tons and tons of auto loans to people that couldn't afford these auto loans at all. We're just not in that kind of environment in the United States. Now, these other countries like Canada, Australia, and it'd be really interesting to watch Russia here over the next few years. That's where the problems really, I think, are going to develop, not particularly in the United States itself. But anyway, that's me interrupting again. I'm sorry, guys.
No, it's no worries. It's great to hear from another perspective. This is what we want. Connects one plus one is 3. Am I right?
Sounds good to me.
And then, to finish off, you've got the Chinese manufacturing PMI on the 31st, forecasted 49.5. So the manufacturing PMI, Chinese manufacturing PMI, so that's the government PMI. And then we've got the Kaizen, which is the private Kaizen manufacturing PMI. Previously, it was HSBC. And that's forecasted actually less than the Chinese. So read how you want to read that, 48.5. I like to try and I like to work out the average of the two, and then use that, and then just see which way it sways further towards. So that's everything from me. To finish off, just to give everyone a heads up, if you're in the UK, or we get quite a few people, to be honest, the last meetup were from all over the world. We have TRI UK meetup that was such a great night. On the 1st of June, Saturday the 1st of June in London. So anybody who wants to come along, and you're not in, we do have a UK group. So if anybody's not in that UK group, just drop me a message. I'll add you to it. And then I've got a spreadsheet on there. Just put in your name. The menu's on there as well if you want food. So just put in the food you want. It should be a good night again. We're trying to come up with some ideas of what we're going to do this time. So once we get some ideas together, we might need another face of you, Brian, just so we can, change.
I think you should do one of Jamie's, a whole bunch of Jamie's.
No, I'm thinking we should do. My opinion, I think we should have one of Shord, Alex, the Bear, Julian, and yourself, and then just have a mixture of the whole TRI crew.
Okay. Bobblehead.
So
we got to get the going.
Also regarding accommodation, so if you're going to come from all over Europe, if you just put it in the chat, in the UK chat, and then we'll try and get somebody who needs to stay somewhere. We usually try and get one big place, and then everyone just chips in, shares together, and then just stays there, and that usually becomes a TRI hub. So just give us a heads up. It should be another fun night to not remember, because it does get a bit hectic as the night goes on. And then that's it. Next presentation on the 1st of April. It will be my last presentation for the month. I'm actually away for a month. So the next presentation, I'll basically just go over the world economy as quick as possible, and just go over things that we want to look at from for different leading indicators, coincident indicators, and all sorts of stuff in general. So that's everything from me. I'll leave you back to the crew, the pros, and I'll, cheers. Thanks again.
I think that was an excellent presentation. Thank you very much, sir. And I kind of like a little bit change of pace here with Jamie's talk with us. And hopefully it gives you all a bunch of new sort of ideas to consider going forward. So thank you very much, sir. Totally appreciate that.
No, it's a pleasure.
And if anything, also, we have a couple homework assignments coming out of this. If we want to, as a group, we could create that sort of lagging, coincidental, and leading indicators list. I think that would be really great information to have on the site. And as well, just sort of a dovetail to Jamie's conversation. If you want to, not a bad idea, we add maybe that demographic link. If you could maybe post that link in the lounge, I'll add it to the library. But you can find, we've got 3 different economic calendar, economic forecasting links on the news and econ in the miscellaneous links section of the library. So at any given point in time, I think I really like this website the most. No, that's an old one. Beg your pardon. I think I like this one the most. It gives you just, and you can actually just highlight the key econ events as they come down the pike. They put them in red. So there is that information if you'd like to do some follow-up on anything that Jamie talked about in his presentation. And here's also the econ calendar that Thomas likes to use of late, this Forex Factory. That's this calendar link right here. So by all means, go and have some fun and pull down those econs. And you know, maybe even for that April 1st next Jamie meeting, maybe even have some questions if you've looked at any of those econ data points, and you know, and have be able to have a debate with Jamie about some of this information. I think that would be great too. If you want to PM me those questions ahead of time, if you don't feel like coming on air, totally fine by me. I think that would be a great idea. Just remind me if you could. Okay, so just you know, I think, you know, as we had sort of said before, this week is pretty significant in the U.S. market in that we have an FOMC meeting coming up. I think I tweeted out something to that effect this morning. Just, you know, so you've got a heads up about that. In essence, here is the FOMC. 3 things to watch as the Fed unveils its latest dot plot. You know, you can go into Fed analysis all you want, but I would just simply take away from the fact that usually when we have these FOMC meetings, and you notice it's a 2-day event, it starts tomorrow. And of course, into Wednesday, and really Wednesday at about 11 o'clock Pacific time. I don't know where that is for you locally. You know, they have it 2 o'clock Eastern time. So that's like 11 o'clock my time. And the rule, of course, here is we don't trust anything that you see in the market until a full hour after the announcement. And what they've actually done here recently, this started, I guess, about 5-6 years ago, is they actually have a conference call, a Q&A session with the Fed chairman or chairwoman, as the case may be, to sort of, you know, just sort of talk through that first hour. Because I have a funny feeling that they sort of noticed that the market gets really wonky for that first hour. So they kind of wanted to fill the air there. And really the bottom line is once he's done his actual speech and press conference, that's when we can start interpreting information from that Fed meeting about how the market's going to react. I wouldn't be surprised if we actually see, you can see the stock market's kind of just wishy-washy here. Frankly, I wouldn't be surprised if we actually have to go through this right through till Wednesday. Don't be shocked if just not a hell of a lot happens in the market. And then, you know, just to sort of bring that full circle, we'll finish off today with just a quick boo at good old Bitcoin. You know, we've talked lots, and it's quite shocking when you actually see this play itself out over time. But, you know, we've talked at length with you guys, and so hopefully here nobody is really surprised by any of this. I just got to find the damn chart. I guess it was over here. You know, we've talked at length recently about how I honestly believe that we're in sort of chop Vegas mode. We're trying to find a bottom. It almost feels like we're in sort of this kind of period where, yes, the market is rallying, but all we're doing is we're just sort of rallying up and testing the top end of the range. And we're probably going to have to spend some time and come back down. For whatever it's worth, everybody, every single year, Bitcoin, I've been in this space now since late 2013. Every single year, Bitcoin always kind of poops the bed around my birthday. So my birthday's coming up here in early May. And you can see how, you know, in this particular cycle, prices sort of peaked early March. And in essence, the whole market was soft right into that sort of May time period. But I got to say, you know, you see that image there, and then we pull up today's price action, And gee whiz, it's, you know, I don't think it should shock any of us. Basically, we have the same sort of pattern. Do you see how this is very sort of chop Vegas-y? So I'm a little concerned that people are getting maybe a little too bullish. The bottom is in, when I still think that really we are in a trading range. Markets enjoyed a nice little up. I'm a little concerned now. Keep in mind, this is FOMC. So it wouldn't surprise me if we have to go on pause here a little bit. But notice we do have this inside bar that's painted here. So if we do lose these lows on Stamp, or this happens to be Coinbase, that low's 39.36 and change. If we lose those lows, then yeah, we're probably going to have to expect some down. You can kind of see how we had an inside bar that fired here, and so we had to have a few down days. We did perk up through the top here, so I don't know whether that necessarily breaks the inside bar thesis. But I definitely think that if we lose these lows, you know, it wouldn't shock me if we actually even have to come down, maybe eat some tail a little bit here. And then, you know, just sort of bring it full circle for you guys. If we look at, I like to have on, where is it? Yeah, here it is. So the hourly charts for things like Bitcoin, Ethereum, Litecoin, and I happen to have on Cripple here. It, you know, doesn't necessarily mean that I'm endorsing Cripple or anything, but, you know, it's obviously a popular sentimental favorite. There are those funny little tails from last week's monster FU move in the market. The old rule, of course, is wicks and tails like to be eaten. So if you are looking for key support here over the near term, my hunch is these tails are probably going to be key support. You do see, you remember we talked about inside bar there. You can clearly see that that inside bar level is basically a confirmation of this M top. You can see how through, you know, I guess even through the London kill zone, right at the top of the hour, you know, the clock here for me, Brian, here in the Pacific, 11, 12 o'clock my time is London kill zone. And then you notice here they sort of did the same sort of thing, a nice little dump against those lows through the European session, then through the New York kill zone. They kind of cleaned it up here a little bit. But very simply put, hopefully everybody can see all these M's. Now what the hell is going on here? Okay, put all that away. Sorry, guys. But you can see M here. Interesting how Litecoin actually did go to new highs, but then lost these lows. So maybe a little bit of a trap. Might even be like a key reversal kind of action there. Keep an eye on that. Ethereum, there's big fat M that's come in here. And Cripple here, the M fired. So on balance, you know, kind of like what we said with FOMC, it doesn't look like there's going to be some rip-roaring bull that we're missing here over the next couple days. If anything, it almost feels like we're in sort of cleanup mode here right now. And then I was watching things like Litecoin bullish bots and stuff. They actually, a lot of these upside objectives have been hit now. So if anything, I just want to find the chart. Hold on a second. Here we are. So on Litecoin, we had, you know, off of this base, a bullish bot. You can see where the bullish bot target is, 58.59. Of course, who's coming in and buying up top here? The public. But you notice that price is basically just sitting right, pretty much right at that harmonic level. You can also see on the profile, really, you could argue that there's a little bit of a mini profile right up top here. So my hunch is probably going to be some play around this original bottoming area. Remember we had said just a moment ago, wicks and tails like to be eaten. So there is that FU candle from last week. We could, and actually, in fact, you could even make the argument looking at this chart, and I'm sure Thomas will talk about this tomorrow, AB, right? And we're now consolidating. If we lose the CD leg, that takes us right back into that tail. And so we eat a bit of that tail. And remember, I had zoomed out, or, you know, when I was zoomed out, I showed that little sort of mini profile. You can see how the profile is much more robust when we zoom in. There's the POC, which just so happens to be basically off of that breakout level. And we've got these funny little sort of notches down here on the profile. Maybe we have to come down against that tail, eat a bit of that tail. Tough to say whether we break the lows of that tail. But I think over the short term, you're probably going to see some buying support come in down here, just simply because there just wasn't that many sellers before, and the profile would like to be sort of filled in. As well, too, you know, if we think Wyckoff, higher highs and higher lows, that was the breakout level. That is that tail. That is sort of the area of the profile that could use some filling in. So could we, you know, spend some time here, maybe post FOMC and fill that in? That wouldn't surprise me at all. And then sort of, you know, just to finish off this thought, what do you think the odds are if we do a fib off of this range? 38.2 is probably going to line up. There's 38.2. That will be the AB equals CD. That will be that tail. And we always say we want to let, you know, Ray Burchett sort of resolve himself before we actually officially call this market crashing, topping, the bull's over. My hunch is if we actually dump hard into these levels down here, reload zone, then it's probably going to be setting up a move like this, where you get a big dump, everybody's like, oh, it's the end of the world, it's the end of the world. And then the market goes and puts in a bottom and surges to new highs. If, however, we go very slowly, we come down to 38.2, then come back up and top out, well, then that probably means that the bull is done. So, but anyway, you shake it. I really think it's a bit dangerous here for us to be chasing a lot of names up here. If anything, I think we probably want to let the dust settle. Remember, we had sort of showed you just a moment ago that Ethereum had already broken. I mean, look how far Ethereum has come here. So could we spend a week or two just sort of cleaning up all this mess? I think so. Whoop, that's Litecoin again. Sorry, guys. Where's Ethereum? There it is. So could we spend a bit of time here just sort of cleaning all of this up? It's interesting how Ethereum has not hit its bullish bot objective. Tough really here to call bull or bear at this point in my eyes. We did have a 33% hit, but I don't know whether we really got a clean setup here. If anything, this almost looks to me to be very choppy. So I'm not really overly excited about shorts. I'd rather hunt shorts up top here. So if anything, maybe, you know, if Litecoin has to come down to 38.2s, maybe what we see is Ethereum comes back down against, there's that FU candle that we were just talking about a bit ago. Maybe we have to come back down against these key lows, then rally back up to make like a head and shoulders type pattern. And then we see direction from there. So, you know, probably a little bit too late to be buyers, maybe a little too early to call a top here. Definitely chop Vegas type market. And if anything, let's go out and have some fun and hunt for really deep discounted altcoins and sort of finish off today's conversation with you guys. I took a little nibble off of, I noticed some of these charity coins are starting to perk up. I did buy, well, okay, I won't go into past trades, but just to sort of finish off today, because we're already at an hour and a half. This was a name that, you know, and again, all the new people to the site, this is a perfect sort of little old lady kind of trade. Hopefully everybody looks at this and sees where the top of the trading range is. Of course, when the market's all stupid and euphoric, and, you know, TRIers should be selling into those events and taking profits. But hopefully everybody can look at this chart and understand why Brian would be interested in a name like this down here. So just a good example, if you happen to go on the trades page, and I don't know whether it's updated yet, but let's go take a look. Yeah, there it is. So I worked a stink bid off of the double bottom yesterday because I was really interested in taking a nibble off of this. To add to the portfolio, just, you know, cute little trading ranges, double bottoms trying to come in here. And I worked a bid in the reload zone and picked up a little bit of this guy here. You can join me if you want. Not pounding the table, but I do like to sort of highlight things that I'm doing in the market. I'd like to give you guys ideas to chew on, and this is one that I think is it's looking like they're just throwing the baby out with the bathwater. And I had really small position on the account, so I just went and picked up a really small 0.025 BTC, not much. And the interesting thing is, you look at the entire range. What do you think the odds are that we get any sort of pop into sort of this area over the next 6-8 months? I have my open order already working to sell half on a double. Is that realistic? I think so. And of course, you can see where the bottom of value is, sitting up at 60, 70 sats. So I think I should be able to get off a free trade here and set myself up so that I can just, keep recycling my original 0.025 BTC, and new names, just keep doing it over and over and over and generating free positions. So there's something for you to chew on. Okay, that's about an hour and a half. So I think we did a really good summary of econs with Jamie. A great presentation. I really like how this is maturing, building out over time. I think if we put a year or two together of doing this, I think Jamie's got basically a career for the rest of his life to report on the BBC about econs, which I think would be so cool, because I think Jamie's totally, you can totally see, I don't know, you can see his cartoon character, but if you ever meet Jamie in person, I mean, he is the ultimate, kind of like Alex, I mean, total poster boy. One thing you got to admit, and I'm sure Colleen loves this, is we got a lot of really good looking, handsome young men here around the site. So, long and short of it here is, I think we're doing an absolutely great job building out your guys' educational base for the rest of your life, and good quality material. And I don't know whether, Colleen, you've seen Thomas. He's a very handsome young man. I mean, all these guys, they're geez, I'm so envious. I wish I was 20, 30 years younger. And a woman. That might help too. But anyway, now Brian's just getting himself into trouble. But great job, everybody. Thank you, Sjord. And I don't know what you've seen Sjord's picture. He's a handsome guy too. So great job, everybody. Thank you, Sjord, for the update. The TRI is taking advantage of the developer cycle. We're working really hard to build out the tools and stuff that you guys really want to use and need on a daily basis. Mr. Mayor, what do you think? Did we do a half decent job for these people today?
Value, approval.
All right, excellent. I think he's even got a shirt and pants on today, so we're firing on all cylinders. So why don't we leave it at that? Have yourselves a great day, everybody. Try to play from a position of strength. Remember what's your number one job here, as always. Got to make sure you can come back and play the game again tomorrow. Have yourselves a great day. I will be in and around the site today as a development day, so I'm working on course material all day long. I do see I have a bunch of questions that people asked, PMing and stuff, so I'm going to be busy answering them. And of course, if I see anything egregious happen in the market, I will give a shout out to that. But remember, guys, we have FOMC here Tuesday, Wednesday. So I'm not looking for anything really big to happen in the market until that event is out of the way. Okay, I think I'm done. Brian, shut up now. Have yourselves a great day, everybody. All the best, and bye for now.